Hello again, this is top-rated forexbrokers.com and we continue our Trading Academy project with one of the most important things in fundamental analysis and in FX trading. This is the economic calendar. This is the reason why the Forex market moves. This is the Forex factory, which I have nothing to do with. It only represents a free way to look at the economic calendar. But as a matter of fact, you can simply Google economic calendar and you will find out that it is offered by various other websites and by various different Forex brokers. All this information is freely available, so there's nothing to hide. What I would like to do here is explain the concept and how to use it when it comes to Forex trading, namely these specific areas. First of all, the date. You'll see that today is September the 29th. And these are the economic events for today. But if you click on this arrow, I won't actually click it, but if you do click on the arrow, you'll go to the next day of September the 30th and then October the 1st. Or you can choose to see all the economic events in the next week. We already know what these events will be. You cannot be taken by surprise by these events. It could happen that you didn't know, but that would only be due to you being unprepared. So, by the time that you select the date here, Friday, September the 29th, you can also select the time here. This is the US time, and this was the exact time that the economic news hit the wire. Then you have the currency from the currency dashboard. This is the currency that will be affected by the economic news. For example, look at the Japanese yen for this year. The housing starts and housing dealing in general is a very important economic release. If you don't believe me, then just remember what happened in 2008 with the financial crisis in the United States, which started from the housing sector. Therefore, it tells us a lot about the health of the housing market, of the construction sector, and all the vertical and horizontal industries that develop in relation, and so on. And so, it gives traders an educated guess about the state of their economy. We also have German retail sales that will affect the euro, or the nationwide HPI, and this will affect the GBP and so on. If you do not know what the economic news means or how to interpret it, this is not a problem. You do not need to have a PhD in economics or anything else. Simply click on the detail and find out more. For example, nationwide HPI in the United Kingdom. What is this? Well, this is the Nationwide Building Society, which measures the change in selling prices in homes for mortgages backed by Nationwide. The usual effect on the FX market and that currency being the Great British Pound. Now, the usual effect. If the actual is greater than the forecast, this is good for the currency. Now, let's step back a bit. What does it mean by the actual being better than the forecast? Ahead of an economic event, you have these three columns: the actual, the forecast, and the previous. This is the previous release. For example, the nationwide HPI, M/M, means it is released monthly. So in the previous month, the release was minus 0.1%. The forecast value is made by researchers, a pool of economists or data companies that do research. They ask economists in various companies about the state of the business, and they can then forecast a value. The forecast is 0.1%, so when compared with minus 0.1% 1 month ago, today's release was supposed to come in at 0.1%. This is the old data. This is the expectations. And this represents the actual data. If the actual is greater than the forecast, then this is good for a currency. What does this mean? Step back and go to the video explaining the terminology in FX trading. Good for currency means bullish. What does that mean? Well, bullish means we want to go long and we want to buy GBP. Against what? A different currency that you may consider weaker. This is 0.2%, and the actual is a better outcome than the forecast. When you compare minus 0.1, minus 0.2, then it's fairly good economic data for the GBP. The fundamental elements are sound for the higher GBP. Now, if you go to the FX market today and you check the GBP's reaction, you will see that it actually moved lower, not higher. You might think this is rubbish, but it is not. The economic calendar tells you in advance the importance or the impact of specific economic news. There is a colour code here. News in yellow, like this nationwide HPI month over month, can be ignored. This is third gear data. It doesn't really matter. News in orange is far more important. Final GDP in the UK, net lending to individuals in the UK. The news in red is the most important ones that truly move the market. And this is the reason that the GBP moved to the downside, because of the current account, which performed terribly. In the previous month, it was minus 22.3 billion, and then it was minus 15.8, and then minus 23.2. And not to mention the final GDP, and so on, and all the repercussions against it. But you have all the information on the economic calendar. Let me show you the economic news. It's supposed to happen at 11 a.m. See this green arrow. The FOMC, Federal Open Market Committee member Harker, gives a speech. Why? The FOMC members vote the interest rates on world reserve currency. This interest rate is everything for the FX market. If you want to find out more details, then you simply click the Details tab, and then you can find out that this guy is due to speak about the economic outlook and financial technology at the FinTech conference hosted by the Federal Reserve Bank of Philadelphia. Audience questions expected, and you don't know what will be asked, and you won't know what the answers will be. It may move the market, or it may move the dollar. It is highlighted here with the orange colour, which is fairly important, so it matters for the overall FX market. Then you will have the Chinese data, manufacturing PMI and non-manufacturing PMI. Manufacturing PMI is like the ISM manufacturing in the United States, or the non-manufacturing ISM in the United States. The previous data is 51.7 and it is forecast to move to 51.5, and then when the actual comes, we can trade. If the actual beats expectation, or if it doesn't beat expectation, a very good question here would be, who cares? Because we can't even trade the Chinese yuan. Well, this is true, but China is the world's biggest manufacturer, and demand from China for products, starting with oil and ending with commodities and with everything you can imagine, that demand influences other major currencies that we can trade. An example is the Australian dollar. Over 30% of Australian exports go to China. If China sneezes, the entire Australian economy will catch a cold. I can guarantee you that if this data, for example, goes to 42 on Sunday when the markets close, then on Monday you will see the Australian dollar moving low because traders will place their bets on expectations. To sum up, you will find out more details on the article that comes with this video. Concrete details regarding the most economic data. I wanted to better explain how to read the economic calendar and why the red news is the one that really matters.